All right, so job order costing. This is about costing jobs which are unique. They're individual jobs that change depending on, who they're producing something for. So job order costing is used when we produce a unique product. A good example would be, for instance, a company that is producing sweatshirts with a university logo on them. They're going to only produce the sweatshirts for, Toronto Metropolitan University for our university in our color with our logo on it. And then if they're producing sweatshirts for, Waterloo or University of Toronto or UTM, University of Toronto Mississauga, the logo is going to change. And so that's a job order costing system because the product is unique. You don't sell it to everybody all over Canada. You can only sell it to that particular university. So keep in mind, that's what job order costing is. So we need to be aware of how to cost a product. And we know already when we cost a product, 3 costs go into it: direct material, direct labor, and manufacturing overhead. And manufacturing overhead are all the product costs that are not directly traceable to a product or service. So let's get started right away applying overhead to jobs, costing jobs. So the big thing is we can trace direct materials, we can trace direct labor, but we can't trace manufacturing overhead. So what we do is we create an application rate so that we can apply overhead. And so we do that by taking the estimated manufacturing overhead and dividing it by the estimated driver that drives the cost. As a driver goes up, the cost goes up. Driver goes down, cost goes down. So let's start with this question. We've got a company that designs and builds retaining walls for individual customers, unique. It's going to be different for every single customer. On August 1st, there were 2 jobs in process. Job 730 with a beginning balance of $12,600 and job 731 with a beginning balance of $9,400. So just to get started, I just want to let's just do the costing. So this is job 730, and then we have job 731. And we have an opening balance. And that would have been the direct material, direct labor, and manufacturing overhead for all the work that we did in the previous period, right? So either in the previous year or in the previous month, that's what it would be. So keep in mind that this $12,600 and this $9,400, this is actually a combination of direct materials plus direct labor plus manufacturing overhead. All of that has already been accounted for in the previous period. That's our opening balance. So then they say they apply overhead at a rate of $15 per direct labor hour. So when we look at this, we're going to look at the application rate and how they calculated it. They would have taken estimated manufacturing overhead in dollars, and they would have divided it by the estimated direct labor hours, okay, total direct labor hours. So they would have done that already. They would have divided these two, and I'm just going to put it so that we can see this. So they would have divided these two, and that came out to be, right? That came out to be equal to $15 per direct labor hour. I'm going to use DLH for direct labor hour. So they calculated that for us. Keep in mind that in an exam, I'm going to make you calculate it. So make sure you understand how to calculate this, right? So now we know how they apply manufacturing overhead. Direct labor wages average $20 per hour. So now we know that the direct labor wages are equal to $20 per hour, direct labor hour. So now we know the wages. Data on August cost for all jobs are as follows. So now we've got job 730, right? We've got job 731, and we have 2 additional jobs. So I'm just going to add 2. I'm going to insert here. We've got 2 additional jobs. We've got job 732 and job 733. Now, job 732 and 733, they hadn't been started in the previous period, so we don't have any opening balances. And then they're telling us that during this month, they added direct materials and direct labor. So they actually added more: 1,800, 12,000, 3,150, 4,500. And the direct labor was 3,600, 8,000, 4,000, 1,600. There. So now we know that. Now, notice that they told us that the cost for labor is $20 per direct labor hour, and our application rate is $15 per direct labor hour, and we don't have direct labor hours in here. So what we need is we need to calculate direct labor hours for each job. So how are we going to do that? Well, they told us that it was $20 per hour, so I can take the money and divide it by 20, and it'll tell me how many hours was worked on this job. So in this case, 180 hours were worked on this job. So if I pull this over like this, it's going to tell me that they worked 180 hours here, 400 hours, 200 hours, and 80 hours. So how does that help me? It allows me to apply manufacturing overhead. So keep in mind, this is applied. So it allows me to apply it. That means I can take this $15 and I can multiply it by the direct labor hours that were worked, and it will tell me how much manufacturing overhead to apply to this job. There we go. Okay, so now we know if I drag this across, it should automatically take the number of hours we have, multiply it by the application rate. So remember, manufacturing overhead is indirect. We cannot trace it directly to a product, so we have to somehow apply it to the product. And in order to apply it to the product, we'll use an application rate, right? And we take that application rate, which is an estimate, and we multiply it by the actual driver. This is an estimated driver. We're going to take this rate and we're going to multiply it by the actual driver, in this case, direct labor hours. That will allow us to apply manufacturing overhead to this job. And that means when I want, at the end of the period, when I want to cost all the jobs, I can cost the jobs by applying the manufacturing overhead. So now I can determine what is the total cost of each of these jobs. So the total cost of each of these jobs, I can add them up. Keep in mind, we got the direct material, the direct labor, and the manufacturing overhead applied. And remember that beginning balance is already all three of them from last month for unfinished jobs from last month. So now we've got the total for each of these jobs. This is the total cost for each of those jobs. I'm just going to change it into a currency so that we can see right away. There it is. Okay, so during August, jobs 732 and 733 were started. We know that. Job 730 was completed on August 17th, and the client was billed at cost plus 60%. So that's how much we charged them. We charged them what it cost us to create it, plus we charged them an additional 60%. All other jobs remain in process. So only job number 730 was completed and sent out. So I'm just going to highlight it because it was completed and done. Calculate the number of direct labor hours that were worked on each job in August. We did that right here. Calculate the overhead applied to each job during the month of August. We did that. We took the application rate and multiplied it by the number of direct labor hours, actual direct labor hours. Prepare job order cost sheets for each job as at the end of August. We don't do job order cost sheets. Okay, just be aware that we're never going to ask you to do that. So there is no need to do that. Okay, none at all. But if we wanted to do a cost sheet, the cost sheet would be exactly this. So I want to highlight this. This is the cost sheet. So I'm just going to put a big circle around it so we can see. This is the cost sheet. So the cost sheet says, here's the beginning balance. Here's the direct material, direct labor, and manufacturing overhead from this period. Here's how much it cost us. So that's basically the cost sheet. And calculate the balance in work in progress at August 31st. So now remember, work in process, which is also called work in progress. What is that equal to? It's equal to the direct material plus the direct labor plus the manufacturing overhead applied for all unfinished jobs. So when I look at work in progress, I can actually add up the 731 unfinished, 32 unfinished, 33 unfinished. This is what's in the work in progress. It's the 3 jobs that are unfinished at this date. What is the price of job 730? So the invoice cost of job 730, that is equal to the cost plus the cost times 60%, right? Or it's the cost multiplied by 160. It's 160% because it's cost plus 60%, right? So the price for job 730, and I'm sorry, I said invoice cost, but it's invoice price. So let's just change that to invoice price. There we go. So what is the cost of job 730? We're going to take that 20,700 and we're going to multiply it by 160%, right? And that is $33,120. The other way we can do this is we can take the cost and then we can take the cost multiplied by 60%. And then we add the two of them together. And it's going to equal the exact same thing, $33,120.